Hi everyone. In this video, we would be covering the first important definition, which is called asset. So let's dig right in. What is an asset? Now, the first thing that I would be doing is that I would break down the definition into small points. All right. An asset refers to the resources an entity owns. Now, I would pause here for a moment. I wrote entity. The word entity is of crucial importance. I did not write owner. I wrote entity. Accounting is all about the business. We do not care about the owner. We only care about the business. Okay. Now, this is a very important accounting concept, which is called business entity. We would cover that later on. So, resources an entity owns, resources that are owed to the entity. And the final point is the most important. Whatever resources you own or are owed to you, they must generate economic benefits. Now, economic benefits refers to money. Whatever you own, it must generate money for the business. It must generate revenue for the business. Okay? Now, a little more, we would dig more deeper into each point. The first point was resources an entity owns. Now, this is for you. I want you to think about all the catchy and attractive stuff you own. It could be an iPhone, I'm sure you have a smartphone. It could be an Xbox or PS5 or whatever gaming console you own, or it could be a watch. You own all these stuff. So these can be your assets. Moving on, let's look at a more professional example relating to the ownership of an asset. Now, let's assume there are two vehicles that are currently being used in my business. Now, you can see the left vehicle is a delivery truck and the right vehicle is a Jeep. So the delivery truck is used for the delivery of essential supplies, which is of key importance. The Jeep, however, it's not mine. It's owned by John, even though it's in my garage. And even if I'm doing business with that Jeep, this is never my asset. Why? Because it's owned by John. I don't have the ownership. My business does not have the ownership. So the first point of an asset is that you must own the asset. Moving on. The second point were resources owed to an entity. Now, let's suppose your birthday is next week. Happy birthday. Now, your dad promised to give you $1,000 as a present. What a wonderful dad. Now, in other words, your dad owes you $1,000. He owes you. Now, this is what it means, resources owed to an entity. All right? So that's your asset. Next, I wrote generates economic benefits. Now, let's move on to the first slide where we spoke about whatever you own, the phone, the Xbox, the watch. Now, a very important question. Fine, you own all this stuff. You have a phone, you have a gaming console, you have a watch, you have shoes, you have all fancy stuff, you have earphones, AirPods. But the most important question is, do these items generate money for you? Are you generating money from these items? I'm sure you're not. Are you doing business with these items? If the answer is no to these questions, then these are not your assets. Economic benefits refers to money, income, revenue, whatever you own, you must do a business with that. You must generate money. Economic benefits refers to money. Now, the final checklist, what you have to always remember. Resources an entity owns, number one, very important. Or it could be resources that are owed to your entity. And the final and most important point is what? Generates economic benefits. Finally, you have to know that there are two types of assets. There's a non-current asset and a current asset. We would be covering these in the next video. So I'll see you in the next video. Thank you so much.